And while the US President Donald Trump speaks highly of a growing economy, economists are split on its shape. For many, this K-shaped reference seems apt, where the majority of wealth is parked with the richest. But what are the long-term implications of this uneven growth? More in this next report.
The US economy is growing, but not evenly. Federal Reserve Chair Jerome Powell says the economy is bifurcated, with strength at the top and strain at the bottom. While the Fed has cut rates twice this year to manage inflation and support growth, Powell warned that another cut in December isn't guaranteed. The top 10% of American households now account for nearly half of all US spending, up from 44.6% in 2019. Meanwhile, lower-income families and small businesses are struggling with slower wage growth, higher borrowing costs, and fading pandemic savings. The wealthiest households have benefited most from surging stock prices, housing appreciation, and strong corporate profits. Big companies like Ford, Delta, and Apple report record demand for premium products, from high-end vehicles to $1,000 iPhones. But everyday consumers are cutting back. Analysts say earnings growth for 2026 is concentrated in just the Magnificent Seven tech stocks, while the rest of the S&P 500 is losing momentum, a clear sign of an economy growing in two directions. The economic divide is showing up on Main Street too. Food pantries report rising visits, and more shoppers are using buy now, pay later to afford groceries. Despite this, overall US growth remains solid. The Atlanta Fed projects 4% GDP growth in the third quarter after 3.8% in the last. Economists say that makes a near-term recession unlikely. But Moody's warns the divide could deepen if asset prices cool or AI-driven market bets fail to deliver. In an economy running hot at the top and cold at the bottom, stability may depend on whether America can bridge its widening financial gap. Business Bureau WION, World is One.